How's it going, everyone? It's Sam. I want to show you what Tom Lee just said. This video's been blowing up. It's already gotten 110,000 views after 7 hours. Tom Lee talks about the S&P 500. He talks about the Fed. He talks about crypto, end of year expectations. Of course, I'm not telling you what's going to happen because I don't know the future and I'm not guaranteeing anything. So recently I got kicked off YouTube, and one of the videos that got a strike was a Tom Lee video. So hopefully this does not happen again. Yeah, Tom Lee, you're too bullish. You're kicking me off YouTube, but I'll give some of my thoughts on this as we watch it. Of course, if you want, you can trade crypto underneath the video at your own risk, of course. But you can check out BYDeFi. If you go to the link tree, it's the second link down. There are also other links to other exchanges, BTCC, etc. But you can get some crypto when you trade on the platform. I really like this, that BYDeFi continues to give back by having these bonuses. Let's roll the disclaimer, then we'll get into the clip. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence. All right, so let's take a look at what Tom Lee just said. They welcomed him onto CNBC. As I said, the video is getting really good views already, so let's see what was so interesting.
Actually, been a while now when you're on. I kind of hold my breath after some of your forecasts, because a lot of times I think, no, wait, and it always seems you have not been really wrong yet in any significant way. You ever have any trepidation, second thoughts? Do you ever get nervous about any of your calls?
Yeah, all the time, filled with doubts. Because, the future.
No one can be right off your 51%. You're like the best ever in this business. You're still bullish, even though you talked about last week, a little wobble in some stocks. Sell on the news because of China. It looks like a little bit of hawkishness out of Jay Powell. I don't know if that lasts.
Yeah, that's right. I think the market has a lot of walls of worry because we've got the shutdown, we've got China, we got the Fed speak, but the market's been up 6 months in a row now. Only 6 times since 1928 that's happened.
Yeah, so we've been up and up and up since April, and the crazy thing is we're still low on the fear and greed. Like, we are in fear, just between fear and neutral. We're in fear, which is crazy. I don't think we've ever seen fear when the market's at all-time highs. This isn't crypto, right? Crypto is down, Bitcoin's down $20,000, a lot of, or 20%. A lot of altcoins are down, 40, 50, 70, 80% from the high, but the big tech stocks are hitting all-time highs after all-time highs, so it's kind of crazy to look at that.
So if you look at November, we're up 5 or 6 times, and in 1942 it was flat. So basically, November should be really strong. I think at least 200 points on the S&P. So maybe
for November.
Yeah, maybe even 250. So maybe we get to 71.
See, that's a call that I just wish you wouldn't make a call like that, right?
You could
250
to 3% if that makes you feel better.
It does make me feel a little bit better, because 250 points to say in November, 250 points. You're giving a time and a size.
But maybe we wobble the first couple weeks just to digest all the gains.
Yeah, that's what I saw in your notes. So initially there could be some choppy trading at this point. What's driving everything? There's still, I guess, sentiment is not positive, is it? You mentioned the wall of worry.
Yeah, I mean, if you look at it like AAII, the average sentiment this year is still minus 11.5, like net solidly bearish. That's only happened 3 other times in 35 years, all in the middle of bear markets. So investors...
It's kind of exactly what we're talking about. And I have to give Tom Lee credit too, because he does give prices and time frames, and most people won't. And of course, like, can you bet on it? No. You have to make your own decision. Don't just blindly follow him. But it is interesting to hear someone's thoughts that has been right a lot.
Investors feel like it's a bear market, but we're up 17%, which kind of tells me I think there's a big performance chase into year end. Over 80% of fund managers are missing their benchmark this year.
Wow. And you don't care about not having government data because does the market ever really wait for government data? Or it sort of sniffs it out, doesn't it?
Yeah.
The all-knowing market.
That's right, because we have a good Fed futures to look at what's implied for inflation. The Fed looks at the bond market. The bond market figures things out before the data comes out. I do think the inflation is probably falling a lot faster than everyone expects. I mean, you can look at trueflation, and we're down to sub 2% inflation, excluding housing.
Shelter, yeah.
Yeah, and shelter is finally cracked.
Yeah. Because that CPI number was, it was just barely cooler than expected, wasn't it?
Yes, but the shelter piece is now at 0.16 month over month. That's at 2% year over year. That level would bring core inflation down sharply. And over 54% of the CPI components are now deflating. It's the highest percentage since COVID started.
It seems, Tom, that the markets have, largely because of what you're describing, moved on from the inflation watch.
Yeah.
They've kind of put that aside as maybe the forefront risk, and much like the Fed has been dragged to doing, wondering about downside risk to growth. I mean, if we just look at things like the reaction of home builder stocks, consumer cyclicals, regional banks, just to that hawkish cut by Powell last week, it seems like it's not hard to get the market a little bit uneasy about, just exactly what kind of a soft patch this is, even if we have confidence that maybe it firms up into next year. So how does that play into the overall action in the index and what you expect from the market?
Yeah, I think there is something the market's trying to figure out, which is AI is consuming jobs, but that's turning it into profits for corporates. So profits are expanding. And then we have profit margins have actually been going up in the middle of tariffs. So how are companies able to take 70% of the tariff hit, but margins are going up? So there must be a productivity boom. So
there's a lot of confusion right now in the market with all this going on. It's very hard to forecast out, which is why I think a lot of people are naturally very cautious. But we've seen so many big dips this year. They've definitely been for buying, right? Big dips are meant for buying right now, and that's what I've been doing and talking about a lot on the channel, right? During April, we were buying a ton. And actually, I meant to mention this earlier. I just bought Bitcoin today, right? I mean, people are very bearish on Bitcoin. I'm not saying that we're going straight up from here or anything like that. Again, you have to make your own decisions. I'm not guaranteeing anything, but just recently I started dollar cost averaging again. Now, it's not a huge amount. It's a very small amount. I'm putting much more into equities and even more into cash than I am into Bitcoin, but I want to get in that buying mindset. And if we go into another bear market, I don't care. That's the whole point of me starting slow, is that I get back in the mental headspace. I'm not decumulating Bitcoin. I'm accumulating Bitcoin. And with alts and with levered positions, that's different, right? I plan on selling those. I hope to be able to sell them if the market has a very strong balance, which Tom Lee will talk about. But with Bitcoin, I want to get back into the accumulation mindset because I don't have to sell, right? If we're going into a bear market, I'll just treat this as another buying opportunity. My wealth went up a lot. Even though I was buying at the top of the last bull market, I bought all the way through the bear market, and those purchases are up 3 or 4x right now, altogether. I bought some under, a lot under $20,000. We were able to buy for months under $20,000. So I guess all those buys are, 5, 6x. But I plan on continuing to dollar cost average. And I guess some people will call me dumb when we eventually fall down even further than here at some point. But there's a pretty good chance that we move up from here too. And I've been able to dollar cost average along the way with, $106,000 Bitcoin.
Somewhere. And then we have, like you said, $7 trillion of cash on the sidelines, but we have high rates. And so the Fed, I kind of think, is trying to not overheat the economy. But we know that you just point out, housing's in big trouble. So I would say it makes sense if inflation's in a good place and jobs aren't really strengthening for cuts to happen, and that would be really dovish. So I think that sort of comes together before the end of the year.
Andrew.
Hey, Tom. Have you been reading all these stories that just been out, recently here about how the Fed is doing all of this sort of repo activity, like a lot of repo activity, and I just wonder what that really means for both the markets and maybe even for crypto? This is a ton of money. I mean, it looks like something like $30 billion just to ease liquidity concerns. This is, past couple of days kind of thing.
It is pretty typical into month end, right? That's what we are seeing. And I think that some of these numbers are also being distorted because of the government shutdown. So we know that the Treasury reserves are building because there aren't any payments being made. So it is something we're watching. But if I was to say that there's signs of bank stress, I'd also be looking for high yield spreads to be widening. And those are actually staying pretty calm.
So you figure no problem with 7,000 by the end of the year, more likely something even above that in your view? Like what? Like 7,300?
Yeah, I mean, maybe 7,300, 7,500.
7,500.
Yeah, so we still, in December, we would build on those November gains.
Look at that smirk. Yeah, I mean, that's big. That's a 10% move from where we are right here. People are already going crazy with Google at like $285 all-time highs. I mean, that would, if Google just went up with the market, that'd be $315 Google, $270 Amazon. Let's see what he says about like Bitcoin and Ethereum.
Santola is like, no way.
No, I don't say no way. I'm open-minded to how far bull markets can go, right? Strong years end strong. We all know about that. The one piece of it I think it's worth kind of struggling with a little bit, though, Tom, is you can look at the AAI surveys, kind of what people are saying, and then you see, equity exposures in, Bank of America private client accounts are basically at their highs, right? So people have kind of, in aggregate, been riding this to some degree. And then you see a lot of what we've talked about in the last several months of, this kind of upwelling of speculative action in non-profitable tech stocks, low-quality equities leading. That's not the Mag 7. That's like a lot of other marginal stuff. So how do you jibe that with that sense that people are still skeptical?
Yeah, I mean, one, we know there must be skepticism because if people were bullish, the institutional fund managers should have better performance. But as you know, this is one of the worst years for fund managers in almost 30 years. I think that there is also kind of problems in private markets. I think private credit is doing terribly, and I think a lot of LPs in alternative funds, whether it's venture or private equity, are pretty disappointed by the returns, like the 5 years into now. But the stock market's done well. So I think that there is bearishness because like private equity hasn't come through and fund managers are doing badly. But you're right, the ones who stuck with public stocks are doing well.
I want you to quit while you're ahead, but I have to ask you about Bitcoin. I mean, you want to go out on a limb there too? Because it looks weak again today, 107. Go below 100 or no?
Well, Bitcoin, I mean, if I look at everything since October 10th, because that was the biggest liquidation in the history of crypto, like bigger than FTX.
Like a margin call almost.
Yeah, it was like almost a miniature rupture, like a tsunami. We're only a couple weeks from that, so I think the market is consolidating. But if I look at fundamentals, like Ethereum, stablecoin volumes have been exploding, application revenues at all-time highs. So right now, fundamentals are leading price in crypto. So I think eventually we consolidate and then we rally into year end.
To 150?
Yeah, I think we can still get to 150, 200 for Bitcoin, and then something like 7,000 for Ethereum.
Whoa. Okay. If you didn't catch that, $150,000 to $200,000 for Bitcoin and $7,000 for Ethereum. $7,000 is nearly double what Ethereum is now, and yeah, obviously $50,000 to $100,000 up per Bitcoin. I think a lot of people would be very happy with that. Like you can see, my trading portfolio here on BYDFi is not very different from a lot of other people's. Like a lot of people are red if they're still on leverage. Now I have lever positions on other exchanges that have been there for much longer. These are more recent positions, so they're red right now. But I always make sure to give myself enough cushion that I won't get liquidated unless we move down a lot further. Like this is $94,000 per Bitcoin that I would get liquidated at, and I'd most likely just add more margin if that were to occur. And actually, this position's still up a little bit because I rolled a position that was up 100%, over 100% into this. So it might be up like 5 or 10% from the original money that I put in. But just in general, people are very bearish in crypto, and yet everything is like all fundamentals are bullish. So that makes me more bullish, honestly, because that's typically when we're close to a bottom. I mean, we do this constantly with Bitcoin where we chop around and then go lower and then make a new high. This has been the pattern for the last, for this entire bull run, right? People get really depressed and bored and leave the market, and then we have a liquidation event, and then we move up. Same thing here. Then we move up. Same thing could be happening here, and then we move up. So I'm still bullish. I think there's a greater chance that we continue this bull run than we go into a bear market, at least with what we're seeing today. If the stock market was down 15% and the economy looked bad and the Fed was still being quite hawkish, people say that Jerome Powell is speaking hawkish now, but they're lowering rates and they're talking about ending quantitative tightening. So yeah, maybe it's a little bit more hawkish than what was expected, or like his speech is a little bit more hawkish, but what they're doing is dovish. And that's really good for risk on markets. So I think that if all that was happening, then I would be much more likely to think we could see a bear market. But equities are at all-time highs. They continue to crush earnings, crush revenue estimates. They continue to become more efficient. So yeah, I think we're in a good spot. But of course, we could have some more chop. We could have some more liquidation events. So stay alive out there. Thank you so much for watching. I do appreciate it. Kind of a jaw-dropping video for some people. Listening to Tom Lee still be so bullish, even when the market's in fear. Let me know your thoughts, though, underneath the video. I really do appreciate it. Again, you can follow me on Telegram in case I get kicked off of YouTube again. You can follow me there, or Rumble, or X. There are links to all those down below in my description. Thanks, and I'll see you in the next one. Bye.